Welcome, everybody, to today's Swiss Re webinar on COVID-19 and supply chain implications. We're very happy to see so many of you followed our invitation and joined us for what I think will be a really interesting hour of inputs and discussion. The COVID-19 pandemic has impacted global trade and investment on a massive scale. And has revealed the fragility of the modern supply chains. Supply and demand side shocks have added to the changes already underway in the global supply chains, and weaknesses in the supplies of essential goods and the reliance on other nations have been exposed, accelerating changes to supply chains, and some say to globalization itself. To hear more about the macroeconomic, geopolitical, and operational implications of these phenomena, and to especially focus on the way we see it in reinsurance, we decided to organize today's session. Today, we want to address the economic impact to date and to discuss how we can build smarter supply chains and to ensure lasting recovery. Before we start with the first presentation, some organizational information for you. We would like to draw your attention to the fact that Swiss Re conducts its business according to applicable competition and antitrust laws. Please bear in mind while attending the webinar. And then an information on Q&A handling. So at the end of this panel, we will have time for questions. Please submit your questions via the chat box. You can also do that during the webinar, during the speeches, so you don't have to wait until the end. And I'll also remind you in the middle to please do so. If you have specific questions about COVID-19 that we cannot answer today, please contact your client manager. Now I would like to introduce our first speaker. I'm very pleased that we have Jerome Haegeli here. He's the Group Chief Economist at Swiss Re, and as such responsible for economic and insurance market research. This includes macro and interest rate forecasts and associated consulting services, as well as steering the scenario analysis and group plan projections. He's an active member representative council at the Institute of International Finance, the World Economic Forum, and chairs the efforts on infrastructure working group at the European Financial Services Roundtable. Today, he will address two topics. First, he will talk about the macro and country level economic outlook. And second, he will give his view on how we at Swiss Re see the impacts on the supply chain. I'd like to hand over to you, Jerome, please.
Perfect, fantastic. Thank you very much, Anne. And it's great to have the webinar today on this super important topic. It's really super excited to talk about supply chain implications from COVID-19. And as you will see in my presentation, it's not just COVID-19 which is driving supply chain changes. It's really COVID-19 is really accentuating already macro trends we had seen earlier over the last few years, I must say. Think about populism. Think about the trade war US and China are now COVID-19. I think it's really an important topic, and definitely on Swiss Re side, it's one of the signature topics on the research perspective, because we think it's important and it's happening as we speak. It has been happening already before COVID-19, but the trend is just accentuating. I think it's really also a goodbye to corporate romance, if I might say it like that, with the just-in-time production and the super highly integrated global supply chain changes. Well, my wife actually, she's a doctor. So if I have to think about how do I explain it to my wife, how to think about supply chain changes, or how do I explain it to my mother, I think it's actually pretty easy. It's like having two kidneys, right? You don't need two kidneys. There's no economic rationale to have the two kidneys, but you are super happy to have two if you really need the other one because the one fails. And I think that's the way to look at global supply changes. We are seeing, as we speak, parallel supply chain changes forming. So with this quick introduction, let me start and focus what is really, really key. I would like you to think, please think about the letter R and S. Yes, maybe on the next slide you see them well visually. On slide 2, the letter R and S. if you think about the letter R and S, yes, 2020, it's all about the recession. It's also going to be a recovery, and that's the second R. The recovery is starting as we speak. But most important, I do believe, the question about resilience is really at the core. And I think our industry can do a lot, really a tremendous lot to strengthen resilience. So the letter R is all about recession, recovery, and resilience. And let's not forget the S as well. And the S, it means we have seen as we speak the biggest recession in our lifetimes. It's a short one. It's a short recession. At the same time, yes, the recovery is happening, but is the recovery going to be sustained? I think it's pretty unlikely it's going to be sustained. It's going to be more protracted. I will highlight that in a second. And on the supply chain changes, yes, we are seeing very important changing on that front. With this, if you look at our global recession from a helicopter perspective on slide 4, if you can move to slide 4, please. On slide 4, you see the global recession and our forecasts in the table. For 2020, we expect the recession to be extremely sharp, deep, but also likely short. And as just mentioned, the recovery is happening at least partially as we speak. As you see on slide 4, you see our forecasts on the GDP front relative to consensus forecasts. You see unprecedented numbers. Look at where the US is expected to be, minus 6.4%. Similar in the Eurozone, and actually even higher, minus 7.5%. And UK somewhere in between. China is still growing, but never before have we seen also a hard landing in China over the last 30 years. So clearly, I think globally speaking, unprecedented recession, never seen as before, and that's what you see in the numbers. I think the good news also, if I look at last week's employment report in the US, yes, that was important. It shows that the lockdown exits of the government is having also positive effect on activity. Activity is coming back, and we do expect that recovery to continue. Absolutely, yes, but it will likely be protracted. Inflation, not much is happening. However, fact is, first inflation is dropping, and then slowly inflation is going to increase. And I think the slow inflation increase is also going to be accentuated by the supply chain changes. I will talk about that shortly. Interest rates really expected to be flat. Look at our forecast 10-year government bond yields. Fact is, it's very unlikely that government bond yields in Germany or in the Eurozone at large are going to go out of this negative territory. I really wish we would see positive interest rate increases. It would be good for the industry, it would be good for society and for financial market infrastructure, but it's super unlikely given the amount of central bank accommodation that we're going to see sharp increases in interest rates. And what's more, probably we can't even digest the sharp interest rate increases at the economy. Now, if you go to the next slide, on slide 5, we show you our expectations for the global economy relative to historical precedents. You see the COVID-19 led crisis or recession. You see this as the red line, the red dotted line, and what do you see? Minus 3.9% for global growth in GDP, 2020, unprecedented. Relative to the global financial crisis, that's actually twice as strong than what we had seen in 2008 and 2009. And yes, there is going to be a recovery, as you see also in terms of the dynamics. We're going to see almost kind of as a yo-yo effect, the economic growth bouncing back. But you also see growth is going to come down, and fact is, over the next 2 years, relative to the pre-COVID-19 trend growth, we're going to lose about $12 trillion in terms of economic output, globally speaking, and that's That's about the size of China. So in the meantime, really important economic forces are happening, and that's important on top of the forces which is happening on the supply chain front. Why do we emphasize that the recovery is protracted? We emphasize that recovery is protracted also because it's really important to look at what was the global economy, what was the state of Europe, what was the state of the UK's economy and the global economy before COVID-19. And fact is, before COVID-19, the global economy was already less resilient than in 2008 and 2009. And given that now we have lots of fiscal stimulus, lots of central bank stimulus, it's needed, it's good to have, definitely. It's the only way to avoid even a worst case scenario, but there's no question about that we are adding more debt, and the debt overhang, which was difficult to digest over the last 10 years, is only getting bigger. And fact is also over the last 10 years, pre-COVID-19, economic trend growth was lower than before the global financial crisis. Hence, doing the right assessment before COVID-19 is as important as doing the right assessment as COVID-19 is hitting the global economy. And in terms of analyzing how COVID-19 is impacting the global economies and various recessions, yes, we have done a lot of new tools and new analysis, and I would like to share with you one of them, which I think is really important in terms of the recovery. And you see the rankings with our COVID-19 vulnerability tracker. If you go to the next slide, on slide 7, please. On slide 7, you see the table on the very right-hand side. Economic resilience indices. That's nothing new. That's a concept we did last year. We ranked the countries according to their economic underlying strength, and underlying strength is driven by the level of productivity growth, the health of the banking system, the opportunities from the fiscal policy, whether there are fiscal buffers, but also whether there are monetary policy buffers. And you see that the US, Canada, Switzerland are in the top 3 in terms of economic resilience index pre-COVID, and hasn't much really changed. And you see on the very left the COVID-19 figures. You see actually that China and other countries, they are really doing strong, and they're really highly rated. And I think that no surprise, right? Unfortunately, no surprise, some of the European countries are lower rated, be it Italy, be it other countries. So on top of the very difficult health crisis, it's also an economic crisis that we are seeing in Europe. So it's really good that we see all the central bank action that we are seeing from the ECB. If I look at the left-hand side, if I look at the fiscal stimulus, fact is actually we are seeing a fiscal stimulus as never before. Fiscal gates are wide open, and we need the fiscal gates to have for them to be really wide open. But fact is also that the economies which need the fiscal stimulus the most, like Mexico, like Turkey, like Spain, or like Italy, these are the countries on the right-hand side on the graph. These are the countries which receive the fiscal stimulus the least. So this is to say we are really going to see differentiation in terms of how COVID-19 is impacting the global economy. Not all countries, not all regions have the same ability to open up fiscal gates, to do monetary policy stimulus. The US, in our view, is definitely really well placed together with China, which is number 1 here in terms of the COVID-19 tracker, vulnerability, scoring. US, China are really well placed to handle, at least economically, the COVID-19 crisis and get out of the recession. Not thinking here about the human tragedy or the human tolls that COVID-19 has on the various regions or countries. I'm just talking here about economic growth and the ability to get out of the recession. And that ability is the strongest in China, followed by Australia, but also Germany, which really ranks very highly together with the US, are in the top 5. And you see even the UK in the top 6. The UK ability to get up in terms of having and seeing a stronger growth is also driven by good fiscal stimulus. And if I were to take into account the loan guarantees provided by the Treasury in the UK, you would even see fiscal stimulus in the UK being higher than what you see here in the graph. And what's more, obviously, a lot of action and super innovative action by the Bank of England, which are providing lots of support for small and medium enterprise, and that's really important. So bottom line, global economy, worst global recession seen in our lifetime. It's the deepest, twice as deep than the global financial crisis. However, good news, it's also going to be one of the shortest in history. Why? Because as the economic lockdowns are being relaxed, you're going to see economic activity getting up again, and that's exactly what is happening. But again, I think for Europe, this is a huge stress test, and that's why we needed the ECB to do much more. And finally, also, if I look at Germany, and the fiscal action in Germany, I'm really happy about the actions last week. Finally, I see Europe getting ahead of the curve. Now, with this global economic backdrop, let's talk about supply chain changes, and let's go right into slide, into next slide, please. Yeah, focusing on the supply chain changes. I think it's like at this picture showing the port. It's really going to be busy because we are seeing lots of changes happening, and Professor Hofmann is going to talk more about it. Let me just focus on a few items and put it into perspective. We're on the insurance sector, and also talk about what we are seeing already in terms of a trend driven by the US-China trade war. In terms of what we are seeing already, if I can turn your attention to slide 8, please. On slide 8, you see global supply changes in the midst of the US-China trade war. You see actually in 2019, you see with the blue bar, the exports of Vietnam to the US. It has really skyrocketed. A big increase from the levels seen the previous years, while the exports from China, obviously, the exports from China to the US, they came down, they were reduced massively. Interesting, though, that they increased so strongly from Vietnam. And if you look deeper into which sectors or what kind of export goods they were, you see actually lots of sectoral shifts happened regionally from China to Vietnam, and within the sector in the computers, electrical products and parts side. And why is that the case? That's the case also because we saw some of the multinational companies, Chinese companies, relocating and using also in some form taking advantages of possibilities to leverage the global supply chain landscape and relocate some of the manufacturing side to Vietnam, and that's what you're seeing in this picture. So the accelerating factor is definitely one of the relocation based on the cost arbitrage dimension. Why cost arbitrage? Because of the trade increases that we had seen with the trade war, US and China. I think going ahead, we're going to see more of the second factor listed here, the adoption of hedging strategies, not just being exposed in terms of the global supply chain to China or to another country, but having also this second kidney. I think that's really important also from a risk management perspective. What is triggering these changes? Well, big picture thinking. The parallel supply changes are definitely driven by reduction in dependencies. I think that's a good thing that we are seeing this reduction in the dependencies. It's a good thing from risk management perspective. And unfortunately, as we are seeing, the US-China trade war is not going away. It's accentuating again. So the relocation is also happening because of the trade war conflict and also avoiding the trade war. Talking about the macro, having talked about what is accelerating, what is changing the global supply chain changes and what is triggering it, let us maybe shift and let's have a quick look at how do we look at it from an insurance perspective. What are the insurance opportunities? let me maybe turn to slide 11, please. If you go to slide 11, yeah, the next slide, perfect, thank you so much. De-risking the supply chain, I think, offers really huge opportunities for our insurance sector. You see here a few points. Let me just highlight number one point. If you take a step back and we analyze the supply chain restructurings, and also the one mentioned already before with US-China trade war on the way, they're going to progress further. And it's not going to be just, in our view, regionally focused in terms of what is happening with supply chain changes in Asia. But in Asia, it's just the figures are just the clearest because we have seen some of the trends already happening last year. I think looking ahead, it's fair to say that everything connected to marine, aviation, or trade, all these insurance products are gonna benefit. We see in Asia itself, we see growth opportunities in terms of premium levels of 5 to 10%, and I do believe this is more on the conservative side. So definitely, changes itself maybe is almost coming like a shock, right, for the global economy, and it will have macro effects. It will also have inflation effects. Global supply chain changes is over the medium term, longer term, probably going to increase some of the inflationary pressure. Because yes, as said at the beginning of the introductory remarks, probably the peak of globalization is behind us, and what we are seeing now is just a manifestation of previous trends. With insurance products and insurance services being opportunities to de-risk economic activities, I think it's a prime opportunity for our sector actually to see opportunities ahead, as mentioned before, in MAT side, and definitely from a regional perspective, I think Asia is going to lead, but again, it won't be just focused in Asia, in my view. So with this, and having used the 20 minutes, let me please wrap up with slide 12 before giving over to Professor Hofmann. What are the key takeaways from our presentation? Number one, macroeconomy. Let's not forget the R and the S. R is about recession. Recession is deeper and sharper than the global financial crisis. What is really matters is resilience, and going ahead, de-risking supply chains is also about resilience. However, the recovery won't be so strong. It will be protracted, and also it will take quite a long time for the global economy to heal. Second, there are paradigm shifts happening as the global economy is healing, and one is the one we are talking now. It's a really important one on the global supply chain front. It's not just COVID-19, as mentioned before. It's also the US-China trade war, but also the populism outcomes that we had seen over the last few years, driven also by increasing income inequality. And this is really leading, in my view, for the corporate world to say not goodbye, but at least the Romans to globalization and just-in-time production. I think that's something which has peaked. And good risk management would also mean having parallel supply chain having parallel supply chains well established. Number three, and then this last point, I think, and again, translating it, what it means for the insurance sector, I think there are opportunities here. There are big opportunities out there. Whenever you have changes in the system, it always takes some time to recalibrate, but de-risking supply chain is an opportunity for the insurance sector at large. I think regional perspective, as mentioned before, mentioned Asia. Lots of opportunities in Asia. We expect from economic research perspective, MAT and products to increase at least by 5 to 10 percentage points in the premium perspective in 2021. So with this, happy to give over to you and or to Professor Hofmann. Thank you very much.
Thank you very much, Jerome, for this very interesting collection of a large number of facts and data points, and then the interpretations that go with it. So I'm very excited. I think that will trigger some good questions for us to discuss towards the end. For our second speech here, I would now like to introduce Professor Dr. Erik Hofmann, Director of the Institute of Supply Chain Management at the University of St. Gallen. We're extremely pleased to have Professor Hofmann with us today. He is a senior lecturer at the University of St. Gallen and heading the Supply Chain Finance Lab of the Swiss Post. His primary research focuses on the intersections of logistics and supply chain management on the one side, and finance and performance, as well as strategy issues on the other side. Professor Hofmann will address the impact of COVID-19 from a supply chain perspective, and will give us some, I think, very practical insights and recommendations at the end of his speech. Over to you, Professor Hofmann, please.
Thank you very much, Anne, for the friendly introduction. Good afternoon, everybody. It's my pleasure to take part in this very interesting webinar. In my short presentation, I will talk about three main topics. To deepen first the statements given by Jerome Haegeli right now, I will explain or try to explain better the economic rationales behind the crisis. Second, I will emphasize on the question whether it will be really come to a deglobalized supply chains or not. We already heard this also in the first presentation of Jerome. And as Anne just mentioned, third, I finally will talk about some measures and practical action steps for supply chain management, maybe for you out there to undertake in order to emerge stronger from the current crisis. But let's come back to the first question and to the next slide. And the question is, first of all, why does the COVID-19 crisis have such a huge impact? And of course, then all of us is interested in, and how will the COVID-19 crisis continue from an economic point of view? In the next slide, you see a classical one, a microeconomic model with, of course, a demand and a supply graph. The demand graph is going down. It's there. You see it at the right bottom, marked with AD, and then the supply graph is this green one going up and marked with this AS. What you see then, of course, you have on the left corner, you see the market price level, the y-axis, and at the bottom, then the quantity of good on the x-axis. And first of all, starting with the coronavirus outbreak in Wuhan, we all know this, in January 2020, we saw a shift of a supply. We call it a supply shock, and then the supply curve shifted to the left. Then in the next slide, a second thing happened, and this was caused by the lockdowns, the massive lockdowns in China in February 2020, and of course in Europe and the US and the rest of the world in March, April 2020. What we saw there was a sudden drop down in demand, resulting in a further decline in the trading volume handled. So then you see it here on the slide, then in the red graphs here, then it's further moving then to the left. And then in the next slide, of course, in the meantime, and this was Jerome Haegeli pointed just out, we currently stuck now in a severe economic crisis with, and this is really a new thing, a double lack of demand and supply decline. What you see in the current crisis is firms lack liquidity to meet obligations while facing lower demand. Additionally, workers lose their jobs. And finally, payment problems are concealed by state-aided loans and suspensions of the obligation to report insolvencies. And this is the current situation. So it's a kind of blurring. We do not really know how the pictures really look like. Finally, to conclude then this theoretical model here in the next slide, then you see in total the crisis will most likely entering in a massive depressing loop. The crisis reduced the economic welfare massively. At the consumer side, you see it here in this picture. This is red shaded at the left above here, and also a loss of producer surplus in the downside of this picture. And of course, this economic crisis, this massive economic crisis, hits the supply chain around the globe. And as the crisis continues to come from two directions, the demand and the supply side, as hopefully this theoretical model shows. And now the question is, what will happen next? And maybe you know this, we can see it in your next slide. What we could try to do is, now we could try to make a view into the crystal ball. But the crystal ball is already very blurring. And here, what you see here in this slide, you see different shapes of the economic crisis, and of course, how the economic crisis will continue. What we have seen already, as Jerome already mentioned, was in all of these shapes, this sudden coming down of the economic worldwide. But then, of course, the question is, what is then next? Do we hopefully see a sharp V shape? This you see at the right top of the hand corner, the sharp V shape. Hopefully not the opposite. It's on the left, a low corner, the so-called L shape. It could be a W shape. This is, you see it at the lower right-hand corner, and here you see also some percentages. It's from a recent study of McKinsey, and they ask more than 2,000 executives. They believe in 36% that we will see a kind of a fluttering V-shape curve here. At this point, what I can strongly recommend you is the following. First of all, I think you should sit down with your teams and analyze the economic impact of the crisis. Very specific, of course, for your company and for your industry. Please don't forget to differentiate between a supply and the demand side. I will come to this later on. Third, try to estimate how the crisis will develop in your specific industry. Is it such a fluttering V-shape, or is it hopefully for you a sharp V-shape and hopefully not an L-shape? You have to answer this question to yourself. And of course, I recommend that you communicate your analysis to your key stakeholders and repeat, of course, such an analysis on a regular basis. Next, please then also the next slide. I would like to turn to the question, of course, will we really see deglobalized supply chains in the future as a consequence of the current crisis? Why? What, of course, we could also see, please next slide, is that official authorities around the world, here I get a citation of Bruno Le Maire, French finance minister, also in the US and other countries, they all pronounce to reduce the dependence on great powers such as China. They want to bring home back their industries. But think about it. Is the crisis really the beginning of a deglobalization? On the next slide, then, we see, of course, that it is not. A decline of the globalization has already been emerged for several years. For instance, you see it on the left-hand side here, the percentages of trade volume per GDP started to decline already at the earlier 2000 years. So, food for thought, of course. And when we move forward to the next slide, of course, in my opinion, a mainly local supply of manufacturers, you see it, this figure here in the lower part of this slide, does not seem very, very likely. A look to the deep tier supply chain reveals there are too many suppliers and even sub-suppliers in the long tail. And this is important. Don't think about just the tier 1 suppliers, but think about the tier 2, tier 3, up to tier N suppliers. And this we call the long tail of the supply chain. At least I think and I believe that indirect dependence on Asia suppliers will remain also in the future. So, in my opinion, as I pointed out, a decoupling scenario does not seem very realistic. So we can move then to the next slide. And of course, then the next question is, what measures in supply chain management appear to make sense as a consequence of the COVID-19 crisis? First of all, what we see on the next slide, it must be this very important noted that China will remain a more important player, mainly because of its huge sales market. And why? Think about a supply chain has always two sides. There is a supply side, of course, with the suppliers, and there is a demand side with all the customer and clients. And think about the population, meaning the buyers, the potential buyers in China, Greater China, more than 1.4 billions. In comparison, for instance, the population in the EU or Europe, 740 million, or in the US, 330 million. This is the first thing. following, I think. If there is a redesign of supply chains, we will not see a shortening of the supply chains, but even more a shift downwards to Asia in the long term, of course, not in the short term. Second, and next slide, please. What we will see, of course, is a diversification of supply chains. And this, of course, will increase resilience, as indicated here in this slide in the lower figure. Diversified supply chains, which you see here in the lower part in this figure, with multiple source concepts, will come along with certain advantages. I see here higher redundancy, of course, capacity reserves, greater flexibility, and of course, with all of these 3 points, greater resilience to potential supply chain disruptions. And very interesting here, no additional increase of inventory is necessary. But of course here, don't forget, a very important prerequisite is that companies invest in supply chain planning tools or even in supply chain transparency solutions. I will come now to my final question, and please to the next slide. How to manage, of course, supply chains in a post-COVID-19 world? And this is a question who all of us wants to know. And hopefully I have a good answer to give here. And of course, the next slide, my answer of this very important is follow a hybrid supply chain strategy. Important, neither black nor white, but with 50 shades of gray. What does it mean? It means, for instance, let's begin with the logistics part. Maybe in some circumstances, for instance, in the long haul, you will, of course, organize your supply chain with lean logistics principles. But at the other side, for instance, at the last mile topic, then you try to apply agile logistics concepts. Combining both, meaning a hybrid strategy principle, then you come up to a concept, it's called agile logistics. Then to move on to the production area. Here, of course, the idea behind a hybrid supply chain strategy is to combine push and pull principles via the concept of postponement or the concept of a delivery to promise. In the third pillar, the purchasing sourcing pillar, there you should establish a combination of global suppliers at one side and local suppliers at the other side. So you will end up with a so-called local sourcing approach, a combination of global and sourcing. Then in the distribution pillar, here you will build up in the future interconnected omni-channel distributions opportunities, and not separated ones, and not e-commerce distribution only, but many different distribution channels interconnected. And finally, then the final pillar, then it's about the supply chain planning. And here maybe you say goodbye to the centralized control tower approach, but you will not end up with a totally decentralized ad hoc planning. You have a kind of a loosely coupled supply chain planning approach here. I am convinced, and to conclude in the next slide, that hybrid supply chain principles will change your business impact, especially in regard of upcoming crises in the future for the better. For instance, here is this shape, this economic shape. Hopefully then you will see with such a kind of a strategy a slower decline at the beginning, a limited decline at the crisis stages, hopefully reaching very fast an intermediate plateau, and you will hopefully then end up with a possible enhancement due to the use of unused potentials lying currently in your supply chains. To sum up, all of us, my final slide is then the next one, my final recommendations to you. First of all, make an assessment to your supply chains and create supply chain scenarios. Try to identify alternative sourcing and distribution opportunities. And I'm convinced that flexibility and speed will beat inventory building. Second, increase, of course, your supply chain resilience. For instance, address near-term cash management challenges and so on. For instance, what could be very interesting for you is to elaborate if supply chain financing solutions will help you to make your supply chains more resilient. Third, try to integrate technology in your supply chains. Try to accelerate the digital transformation and try to shift from classical manual working to automation, and this includes also supply chain transparency and, of course, risk management tools. And finally, the fourth, try to act future-oriented in your supply chains. And as also Jerome already mentioned, be clear about upcoming regulatory and, of course, the competitive environment in your industry, maybe shift in the near future. That's it for the moment, and I hope to be stay in time, and then I will give then the word back to you, Anne. Thank you.
Thank you very much, Erik, for those very interesting complementing aspects on supply chains. I think digitization, a push towards accelerating movements that we have seen even before the COVID crisis, but not to that degree. That's a very interesting kind of theme that we're following on. I would like now to move over to our Q&A section of this session, and at this point in time, the reminder to our audience out there, you should see a Simplex chat panel chat box where you can submit further questions. They will come through, and then I will ask them to Jerome and to Erik. And we already have the first questions that came through during the speeches, so thank you very much for submitting those and keeping them coming. I'd like to start out with a question that's to you, Jerome, and that is the following. Is it likely that the optimistic stock exchange index movements are reflecting reality?
Yeah. Well, it's an easy one. It's reality. Just look at the screen. It's real. Stock markets is a real thing. Whether it's going to be holding, it's another question. I think definitely the macroeconomic reality, it's a really bad one, worse in our lifetime. This economic recession is like car crash without an airbag. But let's not forget to the crash side, we have all central bankers, all fiscal authorities which came to help the accident from spreading further. And fact is, I think the most single important factor explaining stock market exchange is central bank purchases. If you look at the four banks around the world, Fed, ECB, Bank of Japan, by an amount of 300%, 3 times as big of central bank purchases as what we had seen before. And the previous peak was in 2016. And that's such a big force. That's such a big power of gravity. On top of that, low interest rates gives you little alternatives, then also have some real risk. So personally, I'm a realist on the macro front. We need to be pessimistic, but I'm an optimist when it comes to markets, seeing that central banks are here to stay. Thank you.
But maybe to add here, just a minor thing. What I see, I'm not a specialist here, I'm a supply chain guy, but I see or I feel a decoupling from the real economy than to this stock market and financial economy. And this makes me a kind of nervous, and this is already what we see in the crisis.
Oh, true. Maybe Erik, you're absolutely right. But it's not a new trend. It's not a new phenomenon. Over the last 10 years before pre-COVID, we had seen the decoupling. S&P 500 increased by a multiple of 4 times, while the US nominal GDP growth or GDP output only increased by an amount of rounded up of twice. So I think what we are seeing COVID-19 is just, again, continuation of the trend. The bad macro doesn't mean bad markets. We shouldn't forget that central banks are here, and it's a really powerful force. Yeah.
Thank you, guys. I've got another question that I think nicely builds on this initial one, and that is, in order to bring the global economy back out of the recession, how much aligned actions by governments or central banks is needed versus uncoordinated actions around the world? What is your perspective here?
I'm happy to go first. Having been myself a central banker and having worked at the Bretton Woods institution at the IMF for Switzerland, I'm a big believer of multilateral coordination, so global coordination. Fact is, it's not happening. No question about that. What is happening is coordination, central banks and fiscal. This is working well, even within the euro area. Fact is, only I think next week, right? Schengen area is opening up slowly, and you can travel freely again. So yeah, it's not happening. The global coordination, it's a big worry, and I think it accentuates what Erik said before. Globalization has peaked, and there's much more national thinking. It's not a good development. I don't know how Erik, how you see it, but you see it differently.
No, I totally agree, and especially I think it was a forgiven chance for the EU in the early beginning of the crisis, and so because all the countries fall back to their national borders and not they did not think in a more in a larger scale, and but now I have the feeling, especially in Europe, then of course then it worked quite well, the coordination, especially from the European Commission. What we see there is making me more optimistic here. But one thing I miss is currently what we see from the States is a quite short-term measures, or even mid-term. But I miss more initiatives in the long term and coordinated initiatives in the long term.
Thank you both for that perspective. I think that's a some reason to worry there, and to root for and advocate for more coordination and more alignment on that front. I would like to, with the next question, switch back a bit to the country perspective. I think, Jerome, that you introduced in the beginning. And we have a question here around what do you see as the highest ranked countries where their critical place in the supply chain is a lot greater than their economic importance? So an example added here is the US as a relatively self-contained market, Germany being very strong on exports. Do you have a perspective, maybe to both of you, on what are those countries that we might not have on the radar, just seen in isolation, but that are crucially important multiples of their relative weights in terms of impact on supply chains?
Erik, maybe you want to go first. Happy to follow after it. Thank you.
Yeah, I think it's a good question, and I think it's really largely depends on the industry. So you can't say that it's for all the different industries. It's China, of course. China is important, but when you think about some special items, computer chips, for instance, they are not coming always all from China. For instance, Japan or even Vietnam are important countries in this regard. So from a supply chain perspective, more microeconomic thing or a company perspective, it always depends where then this critical, what we call it, nexus suppliers are sitting, meaning when this supplier fails, then of course then the whole supply chains then which coming afterward then fails. And so this is very specific for each company and industry to predict.
I think if I may add, I think there's one perspective of looking today 10 years ahead. I think we're going to think more also where to diversify supply chains within the same currency bloc. And renminbi is gaining lots of importance. All the emerging Asian countries are going to gain importance in terms of supply chain changes, and they're also going to be closer to renminbi, to the RMB. And in Europe, I also do believe it's the classical Eastern European countries which are either in the euro area or becoming to become in the euro in Northern America, the dollar bloc. I think to the roots in terms of thinking also in FX terms. If you want to diversify your supply chains, it's one thing to do it having a different country. If you can, you're going to try to do it within the same currency area if it's possible and feasible. Yeah. Thank you.
Thank you for those perspectives. I'm afraid we're already reaching the time for the very last question, where I think we've got 2 more minutes to cover. And there, we've got one question that ties into, I think, a theme that both of you mentioned, and that is the need for increased transparency of our supply chains, of our demand chains, the need to invest into that intelligence, into simulations, just into actively managing that field and playing through the different scenarios and getting away from the leanest possible option in a very constrained set of boundary conditions. And there the question is, don't we need to think much more end-to-end, not only thinking about supply chains, but also demand chains? And kind of what is your perspective on the maturity of those, the relative transparency of how much stakeholders know about that end-to-end, and do they focus on the right areas?
Absolutely right. To conclude here, I think the term supply chain management is wrong, and I always tell my undergrad and graduate student that the right term must be demand and supply network management, and that's it. And that's how we think as researchers. But again, the term supply chain is misleading. It's not only about the supply side, and it's definitely not a chain, it's a network.
That's very well said. Nothing from my end to add. Thank you.
Thank you both, and I think that that ends us on a very interesting note, and I think on a to-do item going forward. Thank you very much, both of you, for I think 2 very interesting and 2 very complimentary speeches today. Thank you to everybody who participated, and thank you to those who submitted questions. Apologies, we couldn't get to every single one of them. I have a few more concluding remarks here. So yeah, maybe in summary, COVID-19 surely changed the way we work, the way all of us see the global supply chain. I think without COVID-19, we wouldn't have a webinar of this kind. So it very much also transformed the way we're interacting. And of course, supply chain vulnerability, or rather supply and demand network vulnerability, is a global concern. It's affecting many of our clients, but equally us and other reinsurers. So further understanding those networks will help us better understand the risk, better assess the exposures, and also increase resilience to any surprises. So we are very keen to work together with you to understand supply chain resilience, utilize our data analytics capabilities to draw insights from internal and external data sources. And we anticipate that the post-COVID-19 world will further accelerate that need to transition to new models of supply chains. With Swiss Re, you have a strong partner at your side. We're here to help you with our capital strength and with our expertise and our knowledge. We hope this webinar has provided you with helpful information. We intend to really continue the conversation and have more specific discussions in subsequent webinars. In the meantime, your local solutions and client managers will follow up with you after this webinar. Please do not hesitate to reach out to them if there's questions or topics that we couldn't address today. I think it's safe to say COVID-19 continues to show the insurance industry plays a crucial role to make this world more resilient. Reach out to us if you have more questions. Thank you very much again for joining today. Thank you very much, Jerome. Thank you very much, Erik. All the best to everybody and stay healthy. Thank you.
Thank you very much. Bye-bye.